24.
You good? Beautiful. What are we talking about today? Awesome. What's up, everybody? My name is Arman Vakili, and this is episode 24. Kobe Bryant. Last one was 23. Well, you know, the later Kobe Bryant, not episode 8. Or, well, not number 8 Kobe Bryant, but number 24 Kobe Bryant. This is episode 24 of the hashtag Everything Money Show, where we talk about everything that has to do with money. And today's episode is actually going to be another one of those foundational, fundamental type episodes. So we've touched on the topic of the different types of life insurance, leveraging life insurance as an investment. We've talked about a bunch about these things. What I want to talk about specifically now, just for anybody who doesn't know, is, what does that sound? Do you hear that? Black and white, black and white. This is all black and white. So funny. So what I want to talk about today is what is cash value life insurance, right? Because some people hear it and they're like, okay, you know, what's the history behind this thing? Is this even real? I didn't even know that something like this existed. Yada, 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 so on and so forth. And so cash value life insurance is basically life insurance that is under this umbrella. If you could imagine that this is an umbrella. On one side, you have a life insurance benefit. On the other side, you have a savings benefit or an investment benefit. Supplemental cash value is what they call it. And so your $200 a month payment or $300 a month payment, $400 a month payment, dependent on your health, sex, and age, there's going to be a cost of insurance that's going to be anywhere from 15 to, let's say, 30%, okay? And so that's going to cover the cost of your insurance. And then it's going to make sure that you're actually getting your insurance benefit, that if, God forbid, if something happened, from day one, your family would get that money. The other, let's say 80%, is going to go into the cash value side. The cash value side is going to grow based on several different strategies for interest accumulation. One of them is fixed, right? And so if it's growing based on a fixed type of strategy, then that would either be a whole life policy, whole life insurance policy, or a universal life insurance policy, right? Then there's the variable, which is tied directly into the stock market, and that's called a variable universal life. Really, really simple, right? And in that situation, dependent on which company you're dealing with, dependent on which product from said company you've decided to open for yourself, it gives you different options for the allocation of your funds. So you can actually choose to go with this mutual fund versus this mutual fund, or just say, hey, you know what? I want to invest directly into the stocks or the portfolio for precious metals, right? So I don't even want to be in markets. I want to, which is kind of, we're going to talk about it in a future episode, why you shouldn't be investing into the stocks for the precious metals versus the actual precious metal itself, like buying the physical piece of it. But so you can choose where you want your money to be allocated, right? And that's the variable side. And then you have something called an indexed universal life. They also call it a hybrid life insurance, hybrid universal life policy. And so the hybrid part of it, or the index part of it, basically allows you to go as an index. Essentially means a reflection of the market. You're getting an index of the market. So let's say in the variable example, you were using the S&P 500. In the index example, you're getting the index of the S&P 500, which basically means what? Market goes up, you go up to a certain point. They either cap you and they'll say you can't get higher than 12%, or they'll say that you can't, like, you're going to have a participation rate of 50%, 60, 70%, meaning what? Market goes up 20%, you get half of that, which is 50% of that. It's going to be 10%. Market goes up 30%, you get 15%, right? That's what participation means. Or you can get capped, meaning that you will never go above 12%. However, to the same respect, on the opposite side of that, if the market tanks and if it crashes, then you flatline at zero, right? And you will never lose the value of your cash value. You'll never lose the value of your supplemental cash that you've saved up in this account. Now, this is generally what a cash value policy is. This is what it does. why would you choose this versus just regular life insurance, right? The whole idea is, and so we kind of covered this in another episode, so I don't want to get too much into the details of that. It was just a few episodes back, so you can actually look at it if you wanted to. But the whole idea is this cash value that you're building inside of this policy, under this umbrella that we're talking about, is going to be exempt and protected from pretty much every financial landmine that can hit you. Meaning what? Capital gains taxes, estate taxes, basic. Then you have probate, right? Which means what? If you pass away and you haven't planned properly, then the government can hold on to your assets for as long as they want. They lock it up in probate, and then they'll give it to your beneficiaries whenever they feel like it, right? That's what probate means. So you're protected against capital gains, you're protected against estate taxes, you're protected against probate. But then you're also protected against a very large variety of lawsuits and bank levies and all of those things, because, now here's where the catch is, right? Here's where the technical kind of loophole in the entire system comes in. The money that's growing inside a cash value life insurance policy technically does not belong to you. And let me pause real quick, because I'm getting the same exact question coming from one person that's on Periscope. I am a licensed financial planner. I'm licensed with the state of California, and I'm licensed to do asset management as well as insurances. And we're talking about cash value life insurance right now. Thank you very much. So they asked what they wanted to know what my credentials was. They wanted to know what my credentials were. So when your assets, when that money, whatever cash, is under this umbrella of life insurance, then technically that money doesn't belong to you. Technically, something needs to happen to you in order for that money to get paid out to your beneficiaries. So technically, that money belongs to the beneficiaries. And so because of this little loophole, so perfect example, really like the most famous examples that I can give, and these are the examples that I give to pretty much all of my clients. It's like a kind of like the nail in the coffin, right? Two really famous examples. Number one, Martin Luther King Jr., one of the most amazing people in the world, one of the most influential people in the world. His assets were not properly protected, and this isn't something that I made up. You're more than welcome to Google it. You're more than welcome to Google it, right? And these are all facts. So please, just don't be a troll, man. Get out of here. If you don't want to watch it, don't watch it. Just get out of here. I don't know why I'm even addressing this person anymore. Martin Luther King, right? One of the coolest people, one of the most influential people in the world. His assets were not properly protected, and when he passed away, from what I understand, unless this has changed recently, when he passed away, all of his assets got stuck in probate, and to this day, his family still hasn't been able to get all of his money out of probate, right? And this is one of the most beautiful people, one of the most amazing people in the history of human beings. Then you have O.J. Simpson, one of the more questionable characters in the history of human beings. And I have no idea whether what he did or what people say he did to his wife really happened. I wasn't there. A lot of it is hearsay. I don't know, right? I don't know. That's not my job to consider. The only thing that I do consider is the fact that his advisors put his money inside of a cash value life insurance policy. At that time, it was a variable universal life. So yeah, it was attached to the market. Yeah, he could lose value. However, it was protected against the lawsuits. It was protected against everything that he went through with his wife's family when they took everything from him. They took his houses, they took everything he had, except the amount of money that he had locked up in this insurance policy. And the guy's in jail pretty much for the rest of his life, and they still haven't been able to touch the money. And I really don't know the exact numbers, but I know it's something north of the $10-15 million mark. And so if by any chance he ends up getting out of jail and he needs money, it's there, it's sitting for him. It's sitting there for him. What's the moral of the story? The moral of the story is, unfortunately, fortunately or unfortunately, the content of your character has nothing to do with how well you're going to do financially, because a lot of it has to do with how you're actually going to be leveraging your money. I have $77,000 in a 401k. I missed that comment. Stay with me. I'm about to wrap this episode up, and I'll get back to you and I'll answer that question for you if you still want to hang around. So the content of your character really doesn't have much to do with what you do financially and how you do financially, because it has everything to do with, you know, with the advice that you're taking and what you're doing with that advice that you've been given. So right now I'm giving you a certain amount of advice. You're more than welcome to take it. Obviously, I'm sure that you have a lot of other questions that you want to get answered before you make any kind of a move, which is totally understandable and it's expected, and I would want for you to do that. So that being said, there's a link below that will take you to our website that you can actually register for free, no obligation whatsoever, to speak with one of our advisors. And we have licensed consultants available to speak with you pretty much at any moment of the day. And you register, let them know what you want to talk about, let them know what questions you have, and then they'll go ahead and answer everything for you. If there's anything that we can do for you directly, please let us know. If we can't do anything for you, no hard feelings. At least you got some good information that you can go ahead and apply to your life. And that's pretty much it. So this was episode 24, which was the Kobe Bryant episode. And I really, really, really love the fact that we're in our mid-20s and we're about to get to the 30s pretty soon. I'm really excited about it. I appreciate you guys for watching this entire time. I appreciate you for subscribing to the channel. I appreciate you for sharing and commenting and liking, all those good things. And please leave your questions below. It means a lot to me when you guys actually contribute questions and comments, and I can actually use it to go ahead and answer and maybe even create future videos based on the stuff that you say and ask. So my name is Arman Vakili. This was episode 24, and we're gonna call it the Kobe Bryant episode. The 23 was the Michael Jordan episode. 24 is gonna be the Kobe Bryant episode, and I'm gonna go ahead and see you in 25. Big deal, rounded numbers.